Hi, my name is Hazimah binti ZAFFRIE. My metric number 2025-134985.
Hi, my name is SYUHADA binti ZAINURIN. My matrix number is 2025-382-673.
Hi, my name is DIYANA AYUNI. My metric number is 2025-114657.
Hi, my name is NAJIHA binti SALIM. My number matric 2025-143163.
Today, I'm going to explain MFRS 134 Interim Financial Reporting. So, basically, MFRS 134 is about interim financial reporting, which means report prepared for period shorter than 1 full year like quarterly report. Instead of waiting for the annual report, companies provide updates throughout the year. This shows that financial reporting is not only about accuracy but also about timelines. From the definition, this standard set the minimum content and also the rules for recognition and measurement. But the key idea is even though the report is shorter, the accounting principle remains constant with annual reporting. So reliability is maintained even when the reporting period is shorter. Moving to the objective, it ensures the information is timely and useful. This allows investors and stakeholders to continuously evaluate the company's performance, financial position, and cash flow. This reduces information between management and external users. For the type of statement, companies still present key financial statements like financial position, profit or loss, cash flow, and changes in equity. However, these are presented in a condensed format, meaning only the most relevant information is included. The focus here is on materiality rather than completeness. And for form and content, interim report only disclose significant items, not full detail like annual report. This ensures efficiency in reporting without compromising decision usefulness. So overall, interim reports are simpler but still reliable because they follow the same accounting principle. In short, MFRS 134 balances timelines and reliability in financial reporting.
Significant events refer to important occurrences during the financial period that have a material impact on company's financial position, performance, or cash flow. These significant events are based on Scientex Berhad financial year 2025, which covers the period from 1 August 2024 to 31 July 2025. As shown in the snippet, Scientex Berhad acquired 3,735 acres of land during the financial year. This represents a significant event as it substantially increases the company's asset base and strengthens its land bank for future property development. Consequently, this supports long-term growth and expansion of the company's property division. Next, the snippet shows that Scientex Berhad recorded an increase in revenue and profit before tax during the financial year. This represents a significant event as it indicates strong financial performance and enhanced profitability. It also reflects the company's ability to generate higher earnings and sustain its operational efficiency, thereby strengthening its overall financial position. In conclusion, the identified significant events demonstrate Scientex's strong financial performance and continuous expansion, which play an important role in enhancing its financial position and future growth.
So here I am to continue our reporting period part. To begin, I would like to show the evidence from Scientex Berhad's quarterly report. As you can see in these snippets, I have extracted the headers from condensed consolidated statement of profit or loss, statement of comprehensive income, statement of financial position, statement of changes in equity, and statement of cash flow. To make this information clearer and more systematic, I have converted these reporting details into a tabular format. In this table, we can identify that for both the statement of profit or loss and statement of comprehensive income, the current interim report is divided into an individual quarter of 3 months and a cumulative quarter of 6 months, both ending on 31st January 2026. These are compared against the exact same 3 and 6 months period from the previous year, 31st January 2025, to ensure a consistent performance analysis. Moving to the statement of financial position, the reporting logic changes slightly. The current interim period is a snapshot as at 31st January 2026, which is currently unaudited. In accordance with MFRS 134, we do not compare this to the same date last year. Instead, our comparative period is the immediate preceding financial year end, which is 31st July 2025. This allows us to measure the company's financial growth since the last audited full year report. Finally, for the statement of changes in equity, and the statement of cash flow. We focus strictly on the cumulative year-to-date performance. The current interim period covers the 6 months ended 31st January 2026, providing a comprehensive view of cash movement and equity changes since the start of fiscal year. This is compared against 6 months ended 31st January 2025 to help stakeholders identify year-on-year trend in the company's liquidity and capital structure.
MFRS 8 use a management approach, which means the company reports segment based on how management internally review the business. An operating segment is a part of the company that earn revenue, incomes and expenses is reviewed by the chief operating decision maker and has separate financial information. A segment become reportable if it meets the 10% of threshold for revenue, profit or loss, or asset. Also, at least 75% of total revenue must be included in the reported segment. Companies must disclose information such as revenue, profit or loss, asset, liabilities, and profit reconciliation to the financial statement. In addition, entity-wide disclosure include revenue by product or services, geographical areas, and major customers who contribute 10% or more of total revenue. That's all for MFRS 8.
So here I am again for CODM part. What is CODM? Chief Operating Decision Maker. The CODM is a functional role under MFRS 8, responsible for allocating resources and assessing the performance of a company's operating segments. It is not necessarily a single person with a specific title, rather it refers to the individual or group such as a CEO or executive committee that makes the highest level strategic and operational decision for the business. So here are the examples I got from the public listed companies from Bursa Malaysia. For example, one, Scientex Berhad. For Scientex Berhad, the CODM function is led by the Managing Director and CEO Mr. Lim Peng Jin. He oversees the group strategic direction and sustainability policies. He is supported by the Scientex Executive Committee (EXCO) and the key management. They review the performance of the packaging and property division to ensure resources are used effectively. For the second example, Mr. DIY Group Berhad. In Mr. DIY, the CODM role is centered on the CEO, Mr. Adrian Ong Chujin. He is responsible for the group's overall business plan and operational performance. To execute this function, he works alongside key senior management, KSM, to deliberate on financial results and operational issues before reporting them to the board of directors.
Today, I will present on segmental reporting, each type and the 10% threshold using Scientex Berhad as example. According to MFRS 8, operating segment can be combined if they have similar characteristics such as product, production process, customer distribution method, and regulatory environment. There are two types of segmental reporting, business and geographical segment. Business segment involve different product or service with different risks and return, whilst geographical segment involve operation in different economic environments. I will focus on business segment and the 10% threshold followed by geographical segment. For Scientex Berhad, the company is divided into two main business segments, which are packaging and property development. In 2024, the packaging segment recorded about RM 2.6 billion, while property development recorded about RM 1.9 billion, giving a total of about RM 4.5 billion. This shows that packaging contributes a largest portion of revenue. For the 10% revenue test, packaging contributes 58%, while property contributes 42%. Both exceeds 10%, so both are reported segment. For the profit test, total profit is about RM 737 million. Packaging contribute about RM 280 million, which is 29.6%, while property contribute about RM 590 million, which is 70.4%. This show property is more profitable and both pass the 10% threshold and reportable segment. For the asset test, total assets are about RM 6 billion, packaging has about RM 2.6 billion, which is 43.7%, while property has about RM 3.4 billion, which is 56.2%. Again, both exceed 10% and qualify as reportable segment. We move forward to geographical segment. For geographical segment, Malaysia is the main contributor to the company's revenue, showing strong dependence on the domestic market, while revenue from other countries indicate international expansion. In addition, the company also disclosed its major customer. Revenue from one major customer amount to about RM 292 million in 2024, compared to about RM274 million in 2023, and this revenue is contributed by the packaging segment. This shows that the company has significant reliance on the key customer within its operation.
As shown in the snippet, Scientex Berhad divides its business into two main segments, namely the packaging division and the property division. This segment represents different business activities, where the packaging division focuses on manufacturing, while the property division focuses on property development. Firstly, segmental reporting improves performance evaluation by allowing users to assess the financial performance to each segment separately. For example, users can compare the performance of the packaging and property segments to determine which segment contributes more to the company's revenue and profit. Secondly, segmental reporting enhances decision-making by providing detailed insight into different business activities. For instance, the packaging segment involves manufacturing activities, while the property segment focuses on real estate development, which carry different risk level and growth potential. This enables users to better evaluate risks and make more informed decisions.